what is Algofi? Like, obviously, it's a lending and borrowing platform, but what sets it apart from other competitors like on Ethereum's chain, like Compound?
Sure. So besides the performance benefit that we experience by building on Algorand, which is one of the largest things. What's great about building DeFi is that you inherit the security, scalability, and all of the good properties of the blockchain. Like we don't have to build any of that. We sort of just get that for free. So that's a very nice property. But what sets our lending protocol apart, besides the performance, is the fact that we've embedded directly into the protocol a stablecoin, which is helping solve a lot of issues around capital inefficiencies. Because in the Ethereum world, one needs to collateralize a position to mint a stablecoin, and then later over collateralize a borrow position to borrow against it when they're deploying that. You don't have to do this now by merging the two within Algofi. And then beyond that, we have so many ideas as to how to improve the actual lending protocol process that we're planning on doing in a later version in 2022. Like to give you an example, one thing you need to use collateralization essentially to do a borrow. You need to post say 150% of some asset to borrow 100% of another, but it doesn't take into account the correlation between the collateral and what you're borrowing. So let's say you collateralize a stable coin, borrow with a stable, that collateral factor should be allowed to be a lot higher, but most protocols don't take this into account. So, and not to get into the weeds too fast, but we basically have a lot of ideas as to how to make rates markets more efficient, and we plan to do that with Algofi.
Yeah, of course. And for anyone listening that hasn't used it yet, it's really a game changer. I mean, within the matter of seconds, really, you can post your collateral and get reasonable interest rate loans. No need for a credit check. No, 2, 3, 4 business days before they get back to you, and then obviously like another week before the money hits your account. It's pretty revolutionary. So I guess we can skip over my next question, which is what problem is it solving? Because I think we did just cover a lot of that, and we will continue to do so. But how do you think Algofi is going to help the broader Algorand ecosystem?
Sure, that's a great question. So, in our view, in any market, the core things that you need to be able to do are access assets and leverage. And we see this in the traditional financial system where countries where there's a lot of economic success have credit facilities, places where you can go and borrow money leveraging some kind of collateral or say your future cash flows. And this allows people to make purchases that enhance their life, like investing in a house, through a mortgage, or investing in a business. And so, Algofi is sort of bringing that opportunity to the blockchain. And the early applications right now are mostly leverage trading or leverage yield farming. In Algorand, that's specifically via Tinyman or Yieldly, and then the future trading venues, like we see that Algodex is coming live. I anticipate there will be a lot of cross pollination between Algofi and Algodex trading, and future protocols coming. But more broadly, Algofi offers leverage to support any kind of credit required operation on the blockchain. So the fact that I think if I had to summarize it, Algofi provides leverage, which is something that's really required to run the traditional financial markets and definitely the DeFi markets.
Yeah, it really opens up a lot of opportunity. I personally myself, I use or I have been using KuCoin to lend out my stable coins and earn a yield that way. And I've also used one of my stock brokerages, M1 Finance. I'm sure plenty of people use that one to take out a loan against my assets, which was really great because I was able to get one at about 2% and pay off high interest credit card debt with it and just kind of swap it over to that. But it's great to have similar access to these types of funds, these types of borrowing and lending right on the Algorand platform. It's really a game changer, especially for all of us in the space currently. So could you explain to us how your Algofi stablecoin stable works? Like what's the difference between an algorithmic stablecoin and your typical dollar-backed stablecoin?
So a typical dollar-backed stablecoin is sort of what it sounds like. You have a bunch of fiat sitting in a money market, and then we have digital coins getting issued against that. And the managers of that fiat treasury can actually deploy the capital to earn yield. That's how a lot of these stablecoin treasuries make money. They either charge you a fee to mint it, or better yet, we'll just, kind of like, I think Robinhood does this. We'll take some of the cash that's just being, sitting there latently, and invest that in money markets or other instruments to earn yield. So that, it's ultimately, they claim that ultimately when you need to come convert that to a US dollar, that'll be there. And and there are arbitrage mechanisms that keep, through creation and redemption, that keep it pegged at a dollar. Algorithmic stablecoins are trying to do the same thing. It's a stablecoin that is, pegged to some feed. So often it's the US dollar. And the way that it works is you have a smart contract that requires there's always some amount of collateral greater than $1 backing the stablecoin. So that's the thing that we have working for stable, where no matter what, there's always going to be at least $1 worth of collateral backing the coin. And when, say, for example, collateral starts to dip, the minters of stable are required to come and post more collateral to satisfy this requirement. Otherwise, they can get liquidated, in which case their loan is repaid, but their collateral is seized at a premium, or rather, where the liquidator earns, some incentive for doing the liquidation. So, it's very cool that you can sort of, without having to actually use US dollars, you can get a coin that trades like one.
Yeah, of course, of course. Could you dive a little bit deeper on the importance of over collateralization on platforms like this? Like, why can't a user just one-to-one collateralize and then borrow against? I mean, what's the importance of making sure that you can only borrow up, like I think on your platform, up to 80% of what you supply as collateral?
Sure. So, over collateralization is required in the blockchain space because we have no concept of a credit score or something tracking your activity that can affect, how you interact with the blockchain. In the real world, if you don't pay your debts, your assets are seized and your credit score is marked down. And this affects the rest of your life. So there's a great incentive to repay your debts. However, since DeFi is anonymous, there is no such thing yet. Maybe one day there will be, but it's sort of against the ethos of keeping things fully decentralized, and in some parts anonymous. So one has to post at least some premium of collateral, say 130%, because in the event, let's say you were to post it one-to-one and your collateral fell to 90 cents, but you borrowed a dollar, then a rational but unfriendly user would just keep their borrow. And now they've profited 10 cents by holding on to that because that's already left the protocol. So the point of doing over collateralization is so that as the collateral is dropping in value, even before the collateral amount decreases below how much they borrowed, they can get liquidated. And this ensures the protocol is always kept solvent and very safe against fluctuating markets.
I hope you enjoyed that clip, and if you'd like to see the entire video, click the link down in the description below. Also, don't forget to like and subscribe to the channel because it really helps to get the word out there. Thanks.